Walmart beating third quarter expectations, raising its full year guidance, boosted by demand for groceries, toys, and other goods. We talked to the company's CFO last hour, John David Rainey. Take a listen to what he had to say about the impact of potential tariffs.
Tariffs are inflationary for customers, but we want to work to bring down prices. Right now, this is speculation. We don't know what categories of items could, or even what countries tariffs could apply to. We are familiar with this, and if we look back historically, when tariffs were enacted 7 years ago, it did result in higher prices for customers.
Let's bring in Oliver Chen. He's TD Cowen's a senior research analyst. Oliver, you just heard what John David Rainey had to say to the question. I'm curious to get your perspective, though. The risk of tariffs right now, how big of a risk then is that, do you see, for it being here to Walmart's business?
Well, the big question is how much of this will or can be passed through to consumers. It's not a very high margin business, so there's risk, and the pass-through will be necessary given that it's a low margin business. Walmart has the most scale, so that's quite a powerful place to be. And Walmart continues to be focused on everyday low prices. And they've been through tariffs before, as has retail. So they're in a great negotiating place. They have scale, and everything is working. The customer is shopping at Walmart. It's our best idea. And the beat and raise was quite exciting today in terms of Walmart is seeing consistency while others are seeing a lot of volatility. This focus on value meets technology is really a winning formula in this environment.
So it's interesting you mentioned, Oliver, that Walmart and other retailers have been through tariffs before, and we hear from proponents of tariffs that it's really a one-time impact. What does that tell you about what earnings growth could look like moving forward if we do in fact see those 60% tariffs? How are you kind of modeling and looking at the impact that could have on forward guidance for Walmart?
Yeah, what we've looked at is a lot of sensitivities. So if tariffs are above 50%, for example, earnings per share could be weighed down by 10% or more. The main variable is what percentage of these increases can be passed on to consumers. That will be a tougher question, and it's a tougher question in terms of the middle and low income consumer facing pain right now. That being said, the bottom line, many companies will be impacted, and those with scale will benefit more. Those also that have need-based businesses, such as Walmart with 60% grocery, that's a key winning factor. We are also excited about artificial intelligence and productivity improvements, the marketplace model, digital advertising. So these are other ingredients to help the margin. But the main question here, what will be passed through, and the main financial impact in terms of modeling, about 10% or more.
Oliver, when you stack up Walmart's business to, say, Target, one of its biggest competitors, is Target then maybe more exposed to the potential tariffs? And I guess what other companies would we see maybe more of an impact?
Yeah, Target has a lot more consumer discretionary. So yes, it is, whereas Walmart's about 60% food. And this customer under pressure, that consumer discretionary trends can be a lot more volatile than food. Another company, ELF Beauty, they supply a lot from China. That will be something to watch as well. I think it will impact all of our companies, though. Those with more consumer discretionary mixes are more at risk. Those with less pricing leverage are more at risk. Luxury is partially insulated. We like Louis Vuitton, but things aren't great in China either. So there's lots of cross currents, and this is all a negotiating starting point. Fortunately, supply chains have been through a lot. So they've been battle tested for what we're seeing. Furthermore, we've been discussing tariffs for the past few months, if not more. So management teams have had time to think about it and run sensitivities. The main question is how will consumers respond when you raise prices, and which products can you raise prices on and which can you not, and will consumers accept this? It'll be a battle.